Good evening to you all. I think now we can start our session. Today we are looking at manufacturing accounts. That's our topic one for today. It's what we are looking at. Manufacturing accounts. We are going to see how we can prepare the manufacturing accounts, the different sections, and how we can construct the manufacturing accounts. And then we're also going to see how we can prepare the statement of profit or loss, and maybe the statement of financial position when it comes to the manufacturing businesses or the manufacturing firms. Now, manufacturing accounts, what are they? When you try to consider all the accounts, the final accounts of sole traders do not make the goods that they sell. You're aware about that. They don't make the goods that they sell. You'll find that for them, they generate profits by purchasing stock and then selling this stock for a higher price than the cost. Meaning that they make a profit if they sell the stock at a higher price. Those are the manufacturing businesses. They don't make the goods they sell. No, they don't make the goods they sell. They purchase the stock, then they sell this stock at a higher price for them to be able to earn a profit. Profit, that is the difference between the sales and the cost of the goods sold. If I want to get profits, I'll simply get the cost. I deduct that cost from the sales revenue. That's how we arrive at the profit. So profit is the difference between the sales and the cost of those goods that were sold. In reality, most farms do not act in this way. Not every farm will purchase stock, then it sells at a higher price. No. Even if a farm does not make its own products, sometimes you find that it's likely to add something to the products themselves. So we have those farms or those businesses that deal in manufacturing of products. So how do they do it? If a farm actually produces the goods that they sell, then there will be no obvious purchase figure. This is something to note. This is something to note. No obvious purchases figure. That is, if they produce the goods that they sell, there will be no obvious purchase figure to include in the trading account. The costs incurred in the production of the goods will appear instead, and these will be calculated in a manufacturing account. Meaning that instead of the purchases figure, in the statement of profit and loss, we need the costs incurred to produce the goods. Don't forget that in the manufacturing business, due to the fact that they are going to do production, they are going to manufacture the product. So instead of having the purchases figure there in the statement of profit or loss, where we have the opening inventory plus the purchases, this time around we don't have the purchases. We're likely to have the cost incurred to produce the goods, because these firms don't purchase the goods they are selling, they manufacture the goods. We are interested in the cost of the goods that are being manufactured. Okay, that is for the manufacturing firms. A manufacturing account shows the cost of producing the goods that are sold during an accounting period. So under manufacturing accounts or under manufacturing businesses, when they are coming up with their accounts, their financial statement or their final accounts, you expect them to prepare what we call a manufacturing. Why? Because for them, they manufacture the products that they are selling. So they have to find out how much have we incurred to produce these goods we are selling. So they can find out that by preparing what we call a manufacturing account. So ladies and gentlemen, a manufacturing account is prepared to determine the cost of the goods that have been produced or that have been manufactured. That is a manufacturing account. Determine the cost of the goods that have been fully manufactured. Now, when you try to look at the cost of producing the goods, there are different costs that are incurred. We have what we call the prime cost, and then you also have what we call the overhead costs. You should be able to differentiate between prime cost and the overhead cost. You should be able to differentiate between prime costs and the overhead costs. What are prime costs? Prime costs are those costs that are direct. The direct cost of physically making the product, those are referred to as the direct costs. Then the overheads, for them, they are not direct. For them, they are indirect costs. The overheads are indirect costs. So as you're manufacturing, you'll find that there will be those costs that are direct. You can easily trace them to the product. They are incurred to physically make the product. Those costs are referred to as the prime costs. So prime costs are the direct costs. For example, the direct materials are prime costs, direct costs. So direct materials, those are direct costs, so they will form part of your prime costs. Talk about direct labor costs. Direct labor costs. All those are examples of pure direct costs. All those are examples of pure direct costs. Okay. For example, if we are making a table, assuming we are making tables. If you are making tables, we have to purchase wood. You have to purchase wood. Purchase of wood, the cost you're going to incur on purchasing wood, that is a pure direct cost. Because we need this wood in making the table. That is the direct cost. The wage of the person who is going to assemble the parts of the table, that is the direct cost. Wages of the person who assembles the parts of the table, the parts of the table. These are all direct costs because these costs are incurred to physically make the product. So yeah, direct costs and prime cost is the aggregate of all the direct costs. But then we have what we call the indirect costs. These are the overheads. So we talk about overheads, we are referring to those other indirect costs associated with the production, but not in a direct manner. Not in a direct manner. So overheads, we look at them as the expenditure. This can be expenditure on labor, can be expenditure on labor, It can be expenditure on materials as well, materials or maybe services, but which can not economically identified, which cannot economically, which cannot be economically identified with a specific sellable cost. In other words, the overheads are indirect costs. Indirect costs, you are looking at those costs that are incurred, but you cannot directly identify them with the final flow, the final product. We cannot directly identify them with the final product. So in the cost that you're going to incur to do production, there will be those costs that are direct. At the same time, there will be those other costs that are indirect. So that is the cost of production. We have those costs that are direct and then those costs that are indirect. The costs that are indirect are referred to as overhead. So in the manufacturing account, we have to consider or we have to show all the costs, whether they are direct or indirect, as long as they are incurred to produce the product. Okay, those are the direct and the indirect costs. So in the manufacturing account, you find the prime cost there, and the prime cost consists of direct materials, direct labor, and maybe some other direct costs. Then you also have to show the factory overheads or the overheads. Those are the direct costs that are incurred. They are associated with the production, but not in a direct manner. Now, the cost of manufacturing the product will be the total of prime cost and the overheads added together. So the production cost, the total production cost, if you're looking at the cost incurred to do production, the cost incurred to do production, total production costs will equal to the prime costs, then plus the factory overhead. The total production cost will equal to the prime costs plus the factory overhead. The prime costs are pure direct costs. Then the factory overheads, they are incurred to do production, but those costs are indirect. Those costs are indirect. So this total factory cost or the production cost is what you are going to transfer to the trading account, and it will appear instead of the normal purchases figure. Prime cost, we have talked about this, the costs that are incurred and involved in physically making the product, and those other costs that are directly related to the level of output. For example, direct materials, those are pure direct costs. Okay, those are pure direct costs, direct materials. Then you have the direct wages, and then you may also have some other direct costs. We may also have some other direct costs other than direct materials and direct labor. For example, royalties are direct costs, so they also form part of the prime cost. What are royalties? You may ask yourself now. Talking about royalties, what are they? Royalties, those are payments. They are payments made to the inventor. Made to the inventor. Made to the inventor of maybe product, payments made to the inventor of a product or a process or an idea. If I have my idea and I share it with you, if you implement the idea, then I expect a payment. Okay, payments made to the inventor of the product, the inventor of a process, the inventor of an idea. We give them royalties. So how do they determine these royalties? Sometimes you find that the royalties are a percentage of the revenue may be earned by the use of the product, earned by the use of the process, or earned by an idea. Okay. Or earned by the use of an idea. So those are realities. The payments made to the inventor, product, a process, or an idea. So you find that there will be a payment which is based on the percentage of the revenue earned by the use of the product, or by the use of the process, or by the use of an idea. So those realities are also direct costs. So they will form part of our prime costs. They will form part of the prime what? They will form part of the prime. They will form part of the prime costs. Then we have what we call the cost of raw materials. As I've told you, these manufacturing businesses, they will purchase the raw materials, then they transform these raw materials into finished what? Into finished goods. So as they are doing production, we have to find out how much is the cost of the raw materials they have used to produce the products or produce the goods. How much are they incurring to produce? So that is cost of raw materials control. How would we determine the cost of raw materials control? Now, within the prime cost adjustments, will have to be made for the opening and closing stock of raw materials. There may also be carried in one charged on the raw materials and the return outwards of raw materials sent back to their original supplier. The overall charge for materials is referred to as the cost of raw materials. So in the manufacturing account, you have to find out the cost of raw materials consumed, and the cost of raw materials consumed is part of the prime cost calculation, as we are going to see. So in your manufacturing account, you will start with the opening stock of raw materials. Those materials that exist at the start of the period, how much is their value? That is opening stock of raw materials. On that opening stock, we add the purchase of raw materials, because sometimes you find that the opening stock of raw materials is not enough. So we may purchase more raw materials. So we have to add the purchase of raw materials. Then there will be what we call carriage inwards on raw materials. Carriage inwards on raw materials increases the raw material cost. So we add the carriage inwards on raw materials. But don't forget that as you purchase, sometimes you may return back some of the raw materials to the suppliers. So when we return raw materials back to the suppliers, then we have to lay the return outwards of the raw materials. Then we less the closing stock of raw materials. Then finally, we come up with what we call the cost of raw materials consumed. So cost of raw materials consumed equals to the opening stock of raw materials. You add the purchases of raw materials. You add the carriage inwards on raw materials. You less the return outwards of raw materials. You also less the closing stock of raw materials. Then you come up with the consumed. So cost of raw materials consumed is part of the prime cost calculation. Then what next do we have? They are telling us that a true direct cost will vary directly with the level of output. If the output level doubles, then you would expect a direct cost to also double. If the cost does not behave in that manner, then it is a direct, it's an indirect. So indirect costs do not vary with the level of output, but the direct costs do vary with the level of output. Okay. So you should be able to tell that this is a direct cost and this is an indirect cost. So realities, I've talked about them already. These are sometimes included within the prime cost. These are the cost that is paid to the owner of the cooperative process. Usually fees paid for each product that uses this process, and therefore the total reality cost will always directly vary. They will directly be proportional to the level of the level of output. So that is those are the realities. Overhead costs, we have already talked about this, and I've told you that overhead costs are those expenses that are concerned with the production of output, but not in a direct manner. For them, they don't vary with the level of production. We cannot directly trace them to a particular unit that has been produced, so they are indirect costs. All indirect costs are referred to as overheads. These are sometimes known as indirect costs, factory overheads, or indirect manufacturing costs. Examples include factory rent. Factory rent is an indirect cost. Factory rent is an indirect cost. The indirect labor is an overhead. Indirect depreciation of factory plant and equipment is also an indirect cost. But there is a statement down there that depreciation of fixed assets should be included in the manufacturing account section if it is depreciation on assets included for production. So meaning that in the manufacturing account, we only take depreciation of assets that are used for production only. That are used for production. So if we have an asset and we are using it for office work, we cannot take its depreciation in the manufacturing account. No. So you always have to check and see this depreciation. Is it on a property? Is it on a machinery? If it's on a machinery, then it will go to the manufacturing account. If it's for an office equipment, then it will not be taken to the manufacturing account. It will appear in the profit and loss account as an expense, as would be expected in a non-manufacturing organization. So when it comes to depreciation, always find out, is this depreciation for an asset that is used in the production or that is used in the factory? If it is used in the factory, then the depreciation will appear in the manufacturing account. If it's not factory, then the depreciation will appear in the profit and loss what? It will appear in the profit and loss account. Once the overhead costs have been calculated, they will need adding the total of the prime cost, and this will give us the production of the goods. I told you somewhere already up here that the total production costs equal to the prime cost plus the factory overheads. Total production cost equals the prime cost plus the factory overhead. Okay. Yeah. So what next? Make sure you add the total of factory overheads to the prime cost, please. Don't subtract. We add the total factory overheads to the prime cost to come up with the total production costs. Now, there will be what we call administration expenses. selling and distribution expenses, and maybe what we call the financial charges. So administration expenses, those consist of items such as the manager's salaries, um, legal and accountancy charges, depreciation of accounting machinery, and the secretarial salaries. So all those are administration overhead, office and administration overhead. Now, these office and administration overhead, you don't take them to the manufacturing account. No, those will be taken to the statement of profit, or they will be taken to the statement of profit or loss. So always look at the overhead. If it is selling and distribution, if it is office and admin, then we don't take it to the manufacturing account. We take it to the statement of profit, or take it to the statement of profit or loss. Selling and distribution expenses, all costs incurred related to the distribution, the selling of goods, they fall under selling and distribution expenses. For example, the sales staff salaries, commission, carried outwards, depreciation of delivery vans, advertising and display expenses. All those fall under selling and distribution expenses. So these we take them to the statement of profit or loss, take them there. Then even the selling and distribution, we take them to the statement of profit or loss. Financial charges, those are the expense items such as bank charges, loans, all these are financial charges. So they appear still also in the statement of profit or loss. By the way, these are non-manufacturing costs or overhead. They are non-manufacturing costs. In the manufacturing account, you only take the manufacturing costs. Any cost that is incurred but is not non-manufacturing, then that one is taken to the statement of profit or taken to the statement of profit or loss. Now, there's something we need to look at, that is allocation of expenses. Sometimes you find that expenses have to be allocated. Sometimes expenses will have to be allocated. So some expenses may be split between two different areas of the financial statements. For example, you may find that an expense may be split between prime cost and the overhead costs. You may find we have we may find that we have labor costs, but we know labor can be direct or indirect. And we have this as our expense, and you have to split it maybe direct into direct and income and indirect. So always look at the question, and most especially in the additional information, sometimes you find that you have to allocate the expenses to the different areas of the financial statements. Similarly, there may be expenses that have to be split between the manufacturing account and then the profit and loss one, and then the profit and loss account. So you find you have maybe insurance cost, but you have to split it between different sections. You have to show it. There is a manufacturing insurance cost that goes to the manufacturing account. You may find insurance, part of it is office and the admin. You may find that insurance, part of it is selling and the distribution. So this is what I mean by allocation. You have an expense, but you have to allocate it to the different areas of the financial statement. Financial statements, you always have to see, take on the additional information and see if there is need to allocate the expenses. Now, if there are prepayments, remember we have what we call prepayments, and then we also have what we call accruals. What are prepayments? Who can explain what prepayments are and what accruals are? Yes, what are prepayments and what are accruals? Alex, Joseph, Joanna, Susan, what are prepayments and what are accruals? My friends on YouTube, you can use the chat box to explain prepayments and accruals. I will read your answers. I see Flavia is on, Christine is on. What are prepayments and what are accruals? Alex, Patricia, prepayments, accruals.
Can I try to say something a bit?
You can give.
Thank you. Let me say about the prepayments. These are payments that are made before the completion of a certain product or a certain process, or maybe goods that have been something that is been paid in advance.
Okay. Then accruals, who can explain accruals? Accruals, prepayments. Susan, Joseph.
Yes, sir.
Accruals.
Approvals are authorizations granted by a person or entity with authority, indicating that a particular action or decision of a transaction has been reviewed or accepted.
Then accrual.
Yes.
What about accruals?
Those are expenses that are incurred but not yet being paid.
Expenses incurred but not yet paid for. Okay, so members, when we talk about prepaid expenses in accounting, Flavia on YouTube, you say that prepayments are payments made in advance. They haven't yet been used up. Okay, thank you, Flavia. Now, when it comes to accrued expenses, those are expenses that the company has incurred but has not yet paid. Okay, the accruals expenses that the company has incurred that a company has incurred but not yet paid, but not yet paid. Those are accrued expenses. Okay. So the payment is pending, in other words. The payment is what? The payment is pending. Then, for example, you may find you have unpaid wages, you have unpaid electricity bills, you have interest expenses that have not yet been paid. So those are accrued expenses. And of course, these are liabilities to the company. Then prepaid expenses, these are expenses paid in advance. Okay? Expenses that the company has paid in advance. Expenses that the company has paid in what? In advance. Expenses that the company has paid in advance for the goods or services that will be used in the future. Okay? Expenses that the company has paid in advance for the goods or services that will be used in the future. So if there are prepayments or accruals to adjust, then this should be completed before the next split. So before you split, first make the adjustment on the expenses before it. Okay. Yeah. So that's about allocation of expenses and then maybe the prepayments or accruals. Let us look at what we call work in progress. Remember, these are manufacturing firms, they manufacture products. At the end of the period, you may find that there are some products that are actually completed. They're not yet fully completed, but partly we are completed them. They have some pending work that is yet to be done. So they are partly finished goods that are still undergoing part of the manufacturing process, work in progress. Okay, those goods which are not finished are known as work in progress. So there will be opening work in progress as well as closing work in what? As well as closing work in progress. So the opening work in progress is added onto the production cost, and then the closing work in progress at the end of the period will need subtracting to give us the cost of the goods completed during the period we are dealing with. So you need to know how to deal with the closing work in progress. There are those goods which are not yet, which are not finished, they are partly completed and they are still undergoing the manufacturing process. So the opening inventory of the work in progress is added to the production costs. Then the closing work in progress is deducted, give us a figure for the cost of goods that have been completed during the period. That is work in progress. Now, in manufacturing organizations, we have three types of inventories. We have three types of inventories. What are these three types of inventories? We have what we call raw materials, because we know these firms, as they are doing production, they need raw materials. So at the end of the period, you may find that we still have unused raw materials. So we may have inventories of raw materials. So the purchases of these will be adjusted for the opening stock and the closing stock in the prime cost. Joy Kaija, accruals and expenses paid for services already used. No, that is wrong. Remember that expenses paid for services not yet consumed. Yes. Oh, okay, you're right. Accruals are expenses paid for services already used. No, not really. But prepayments, I agree with you. Prepayments are expenses paid for services not yet consumed. Yeah, you're right on prepayments, but accruals, services already used. Not really, Kaija. Okay, work in progress, partly completed goods will be dealt with at the end of the manufacturing account. Finished goods, there will be opening and closing stocks. We deal with this in a normal way in the trading account. Opening stock, of course, the closing stock will be subtracted. We are going to see how to do that. If you come up with a statement of financial position, the closing stocks will appear as current assets in the balance sheet. So all the closing stock of raw materials, work in progress, finished goods, they will appear as current assets in the statement of financial position. Now the principle is the same for all these types of inventory. The opening stocks will always be added, and the closing stock will always be deducted. We are going to see how to deal with this in the financial statements. Now there are some examination tips. They are there. It's vital that you learn the correct sections of the final accounts of the manufacturing organization, prime costs, factory overheads, and the trading and profit loss account. Only items linked to the level of output will appear in the prime cost calculations. Those items related to production but not in a direct manner will appear in the factory overheads overhead section, the manufacturing account. When you're dealing with the depreciation, only depreciation of productive assets will appear in the manufacturing account. You have to show all your workings for the adjustments, show the calculations for the cost of raw materials controlled. Don't forget to show all the kinds of stocks on the statement of financial position. Never put items in twice. You automatically get numbers for this item. If you don't know, then take an educated guess. You can take a guess, but don't put items in twice. So these are some of the tips, exam tips when it comes to manufacturing accounts. So this is what I have for today. So we have to also look at what we call manufacturing profits and the provision for unrealized profits, but that is likely to be in our next session. Today, I just want to look at something simple. Then, as we continue on, we can also look at the manufacturing profits and then the factor and then the provision for unrealized profit. Now, what we are going to do, I'm going to take you to question. I've already shared this question in the group. We are going to do that number together here. So I'll be doing the manufacturing account, the statement of profit or loss. And where you have questions, please feel free. You can use the chat box to ask your questions. Those on YouTube, you can use the chat box still down there to ask your questions about manufacturing accounts. I'm going to answer all the questions. So now let us move to the question which we are going to. Let us move to question. So I have a question here, which I'm going to use just as a sample question to show you how to do the preparation of the manufacturing account and then maybe a statement of profit or loss. Okay. Let us see how to prepare the manufacturing account and then the statement of profit or and then the statement of profit or loss. So that's our question on the screen. I've already shared this. Let us try to go through this very fast. So the first part of the question, you're required to explain why a manufacturing statement is prepared, explain why a manufacturing statement is prepared, and discuss how the information in this statement is helpful in determining the profit or loss for the period. Explain why a manufacturing statement is prepared, and discuss how the information in this statement is helpful in determining the profit or loss for the period. So we have already said, we have already talked about the manufacturing account, and I told you that this account is very, very essential in the manufacturing business because it gives us the breakdown of the costs that have been incurred in producing the goods during a specific period of time. Okay, that information is very crucial for inventory valuation and the profitability assessment. So explain why manufacturing statement is prepared and discuss how the information in this statement is helpful in determining the profit or loss. Okay. Why the manufacturing statement is prepared? You know the reason we prepare that statement to determine the costs that are being incurred to produce the goods or services. So let me just put something small here. Manufacturing statement. Manufacturing statement. Manufacturing what? Statement. Or your manufacturing account is prepared is prepared to determine the cost incurred to produce. Manufacturing statements prepared to determine the cost incurred to produce the goods during a specific period. During a specific period. So we prepare the manufacturing statement or account to determine the cost incurred to produce the goods during a specific period. That information about the costs, such information is crucial. Such information is crucial for inventory valuation, and the profit assessment and the profitability assessment. So if you want to assess whether the company is making profits, the profitability of the business, we need the information about costs that have been incurred to do production. Then we discussed how the information in this statement is helpful in determining the profit or loss period. Now, how is that information helpful in determining the profit or loss? How is that information helpful in determining the profit or loss? Okay. Now, when we look at the manufacturing account, it gives you the information about the cost of goods manufactured. It gives you that information about the cost of goods manufactured. So when it comes to how is that information helpful in determining the profit or loss, what I can say, the manufacturing statement, provides a figure for cost of goods manufactured, cost of goods completed, okay? It provides the figure for the cost of goods completed. That means provides the figure for the cost of goods completed, which is used in the computation, of the cost of sales, which is used in the computation of the cost of what? Which is used in the computation of the cost of sales. So once the cost of sales is determined, it is subtracted. It is subtracted from the revenue to calculate gross profit. To calculate gross what? To calculate gross profit. Calculate gross profit. Operating expenses are deducted from the gross profit to arrive at the net profit. Arrive at the net one, arrive at the net profit. So you see how the information from the manufacturing statement is helpful in determining the profit or loss for the period. That the information about the cost of goods that have been completed, we are going to use it in the computation of the cost of sales in the profit and loss statement. That cost of sales figure, once we have it, we subtract it from our revenue, calculate the gross profit. Then once we have the gross profit, we can deduct the operating expenses from the gross profit to arrive at the net profit. So you see how useful that information is when it comes to determining the profit or loss for the period. That is part A, around 3 marks for that brief explanation. Around 3 marks there. Around three. Thanks for that. Around 3 marks. So now let us go to part B where we have the numbers. Let us go to part B. The following trial balance relates to Textile Limited for the year ended 31st December 2023. So this is the trial balance. You have the debit and the credit balances, inventory of raw materials, finished goods, work in progress. We have the factory wages. You have realities. I've talked about them already. The purchases of raw materials, carriage inwards, plant and machinery at cost. You have the computers at cost. There is accumulated depreciation as at the start for the plant and machinery, and then the computers. We have the general factory expenses, the electricity expenses, rent, insurance, administrative expenses, accounts receivable and payables. You have the cash at bank, share capital. You have retained earnings, sales revenue, and then the sales commission. So that is your trial balance. Additional information, we have the closing stock as at 31st December 2023. That is your closing stock. Of the factory wages, 80% are direct expenses. We talked about allocation of expenses. You see it here. So 80% of them are direct expenses. The following information relates to the expenses for the period. Insurance, the trial balance was paid on 1st September, covering a period of 12 months. So we expect to see some adjustment in insurance. There was no accrual of prepayment of rent at the start of the financial year. The rent expense per month was 4 million. Electricity prepayment at the end of the year amounted to 300,000. The following expenses are portioned as follows. They're showing you how you're going to apportion the expenses. The factory has 10 computers purchased 2 years back. 5 of these computers are used in the office, 3 in the factory, and 2 in the warehouse. Depreciation of non-current assets is as follows. Plant and machinery, 0% on cost. Computers, 20% on cost. Prepare for the Textile Limited for the year ended 31st December 2023. A manufacturing statement, 10 marks, and then the statement of profit or loss. So let us prepare the manufacturing statement for the Textile Limited and then the statement of profit or loss. Where you have questions, please feel free to ask your questions. So this is part B. This is part B Roman 1. This is part B Roman 1. Members, those who are requesting for the recording, the lecture is recorded. YouTube, you can access this lecture anytime. You'll find it. It's always there. It's going to be there. So the recording is there already on YouTube. We are live. Some others are here on Zoom, others are on YouTube. So the recording is there already. So B Roman 1, we want to come up with the statement, the manufacturing statement. You write the heading. This is textile. Textile. This is the spelling. Textile Limited. Textile. Okay. Textile. Textile. Okay. Textile. So Textile Limited statement, okay, manufacturing statement or manufacturing account. Textile Limited manufacturing statement. Textile Limited manufacturing statement for the period for the year ended. For the year ended when? For the year ended 31st December 2023. For the year ended 31st December 2023. So that is my heading. If you have a ruler, you underline your heading. As you can see, so the amounts are in shillings, our currency, the presentation currency is shillings. I have to show that. So I have shillings, but these amounts are in thousands. The level of rounding off is thousands. So I have that. So we have the particulars of our particulars. I'm using 2 columns. Okay, that's what we have. So in the manufacturing statement or in the manufacturing account, we start with the information about raw materials. We start with the information about raw materials. We start with the information about raw materials. When it comes to raw materials, we get the opening inventory of raw materials first. We get the opening what? We get the opening inventory of raw materials. Take that from the trial balance. Check the trial balance. You see the opening inventory of raw materials. It's there. 45,800. So opening inventory of raw materials, we have 45,800. That's the opening inventory of raw materials. 45,800. Now that opening inventory of raw materials, we add the purchases. You bring the purchases. So add the purchases. Those are purchases of raw materials, please. We add the purchases of raw materials. You get them from the trial balance, that is 345 millions. 345 millions. That is the purchase of raw materials. Then carriage inwards, carriage of raw materials, the transport costs. Carriage. On raw materials, or you can just say carriage. Still in the trial balance, you will say carriage inwards, that is 24,500. Carriage inwards, 24,500. That is carriage. So if you have raw material returns, maybe you're returning back some of the material suppliers, then you minus the raw material returns, but I don't see any raw material returns in the question, but if you have them, then you deduct them to be minus raw material returns that we don't have. So what I have to do is to less the closing inventory. Less the closing inventory of raw materials still. Where do you find the closing inventory of raw materials? You find that in the additional information always. Closing inventory, it will always be given in the additional info, in the additional information, and the closing inventory of raw materials is 52,950. 52,950. Those with the calculators, please do the needful, do the addition, do the subtraction, then we see what we have. Okay. Try to do the addition and subtraction. We see what we have. Okay. We try to see what we have. What we have will be the cost of raw materials consumed. Cost of raw materials, that one. Cost of raw materials consumed. Those on YouTube, please, you can help us with the cost of raw materials consumed if you have computed. Those online, Zoom, please work out this very fast. How much is the cost of raw materials consumed? Cost of raw materials consumed is how much? Should be having a calculator on table.
362,350.
350. That is our cost of raw materials consumed. That is the cost of raw materials. That is the cost of raw materials consumed. What next after this? We are going to bring the direct expenses, those other direct expenses. The direct expenses. And other direct expenses, we see we have realities. I talked about realities and I told you it's a direct cost or a direct expense. It's part of the prime cost computation. So we have realities. How much are the realities? Check the trial balance. How much are the realities? 124,500. Realities, we have 124,500. Realities, we have 124,500. Then somewhere they talked about the factory wages. We have been told that factory wages, 80% of them are direct expenses. Factory wages, 80% of them are direct expenses, so they should come down here. The factory wages. %80 of them are direct expenses. How much are the factory wages? The factory wages are 185,000. 185,000. What is 80% of 185,000? Someone do the math there first. 80% of 185,000. That is how much? That is 140. 148,000 members.
148,000.
Should be having a calculator, please. Whenever it's time for class, get a calculator, a ruler. So these are the direct expenses which we have as per the question. So we add them, we can transfer them to the last column. 148 plus the realities of 124,500. We get this is 200, 7,500. When we add this to our cost of raw materials consumed, then we get what we call the prime cost. How much be the prime cost? The prime cost is 634,850. That is our prime cost. So prime cost is the aggregate of all those direct costs. Okay? The aggregate of all the direct costs. That is our prime cost. Harriet, thank you. I see you on. Gertrude. Okay, 148. All right. So, by the way, this is a statement. Harriet, I see you're asking why do we record opening inventory on debit? This is not a T account. This okay, these are just credit. No, this is just called amounts. So prime costs, that's what we have. Now we bring in the factory overhead. Now we bring in the factory overhead. Factory overhead. Those costs that are incurred, they are associated with the production, but not in a direct manner. Factory overheads. Let us look at the factory overheads. Go back to your trial balance. You have general factory expenses. I can start with that. The general factory expenses, 165,800. General factory expenses. Let us start with general factory expenses. These are factory overheads. We have the general factory expenses. We have 165,800. $165,800. Then from the general factory expenses, what else do we have? We have the factory wages, by the way, because they have said that part of them are direct, meaning that the 20% is indirect, 20% is indirect. So you can also bring the factory wages, the 20%. 20% times 185,000. What is 20% of 185? What is 20% of 180? That is how much? 20% of 180. That is 36,000. Is it 36? 37. You see, 20% times 185.
37.
That is 37. Okay, this is 37. Thank you. Okay, what else do we have under the factory overheads? The general factory expense, we have that. We have electricity as well. We have electricity. we have electricity. But when it comes to electricity, always check on the additional info, always check on the additional information and see, because some of these expenses are likely to be allocated to the different areas of the financial statements or different sections. Electricity expense, we are going to take 1/5, the factory. But then I told you that before you allocate, first check and see, because you may be having what we call the end of year adjustments. You may find that you have some accruals, you have some prepayments. So according to additional information in note 3, there is bullet 3. Electricity prepayment at the end of the year amounted 300,000, meaning that there is a prepayment. 300,000 of electricity is a payment for the next year. So we have to minus this before we allocate. What you do, you write electricity, open bracket, show that 21.4 space, wherever there is a prepayment of 300,000 as per the additional information, but in the factory, I take 1/5. Remember, the 21.4 is from the trial balance, as you can see this. But then we have a note here, electricity prepayment. Prepayments are deducted from the expense such that we only report the expense for the year. What belongs to the future minus that. Okay. So how much is now our electricity expense here? How much do you get as your electricity expense now after that adjustment? Yes. How much do we have? What is 21.4 minus the 300, the prepayment, then times 1/5, because it's 1/5 that we are taking to the factory. That is how much? 4,000?
20.
4,220. Okay, thank you. That's our electricity. So from the electricity, there is also rent. Let us check on the rent and we see there is rent. When it comes to rent, if there are any adjustments to make, there was no accrual or prepayment of rent at the start of the financial year. The rent expense per month was how much? The rent expense per month is 4 millions. So the rent expense for the month is 4 millions. The rent expense for the month is 4 millions. Now the question is, how much rent have they paid? Where is rent? They are paid 45.8 millions. 45.8 millions, but remember, every month they pay 4 millions. Get your calculators. What is 4 millions times 12 months? Because a year has 12 months. What is 4 millions times 12 months? Members, 4 million times 12 months, that's how much? Those online on YouTube, 4 million times 12 months, we get how much, please?
48 million.
We get 48
million.
We get 48 millions. But how much have they paid? Rent, they are paid 45.8. They are paid 45.8, but our rent for the year should be 48 million. So if they are paid 45.8, it means that there is a portion which is not yet paid. We have some accrued rent. Okay? So on rent, we say they are paid 45.8, but there is a portion that is not yet paid. So we are supposed to pay 48 millions, but they have only paid 45.8, meaning that there is a 2.2 M. This is accrued. Okay, that is accrued because our range total expense should be 48, but they have only paid 45.8. So there is a 2.2 million that is accrued. But in the factory, we have been told that we should take 4/8, the rent, as per the additional information. Rent 4/8. So how much will be the expense? How much will be the expense? So what is 4/8? That's 24,000. That is 24. That is 24,000. So 24,000 is what we are going to take as the rent for the factory. That will appear as 24. The factory 24.1. Sorry, 24,000 is our rent for the factory. 24,000. Which other expenses do we have? Electricity, we have that. Rent, we have that. We have insurance as well. Insurance. We have insurance. When it comes to insurance, how much is our insurance? Insurance, we have 24,000. Insurance is 24,000. But let's look at the additional information. Insurance, the trial balance was paid on 1st September, covering a period of 12 months. But you're closing on 31st December 2023. Don't forget. So if you're making your payment for insurance starting on 1st September and it covers a period of 12 months, means that there is likely to be a payment on insurance. Okay. There is likely to be a prepayment on what? There is likely to be a prepayment on insurance. Let us try to find out and see. So insurance. So on the insurance, let's try to check and see what happened. How much did they pay? Insurance, they paid 24 millions. So I'll come here and say 24 millions. By the 24 million they have paid is for a period of 12 months. Don't forget. It's for a period of 12 months. It's for a period of 12 months. For a period of 12. It's a period of 12 months. So what I'll do, I will divide, I'll say times. So insurance we need should be covering a period from September, October, November, December, a period of 4 months. But they are paid for 12 months. So meaning that out of the 24,000 they are paid for a period of 12 months, I only need insurance of 4 out of the 12 months because that's what I need. That's the expense for the year. The insurance was paid from 1st September, covering a period of 12 months. But for us, we need only 4 months. Why? Because from this date, 1st September 2023, we are reporting on 31st December. So the insurance we need should be for the 4 months from 1st September 31st December. So I don't need the entire 12 months because the 8 months is prepaid. The 8 months is prepaid. Then in the factory, what do we take? The factory have been told. Now there is a question mark there. There is a question mark on the factory under insurance. And what does that mean? It means that it's you to find out the missing fraction here. When you add all these fractions, they should be giving you a total of 1. They should be giving you a total of 1. So What is the missing fraction? That question mark means that you're supposed to put a figure there. It should find out that figure. So let's try to find out what to put. When we add all the fractions, they should be giving us 1. So just get 1 minus their 4 term minus their 4 term, then minus the 2 over 8. You remain with a half. So here there is a half missing. So in the factory insurance, you take a half. It's you to find out that missing fraction. So it's a half that we take to factory. So how much would be the insurance expense? 24,000, which was paid. But I need for a period of 4 months out of the 12 that were paid, that is 8K. But out of the 8K, I need a half that will go to factory, and that is 4,000. That is 4,000. So that's the insurance. What else do we have? Administrative, that is office and admin. Okay, let us look at the depreciation. Depreciation, the factory has 10 computers purchased 2 years back. 5 of these computers are used in the office, 3 in the factory, and 2 in the warehouse. So meaning that we have to get the depreciation of the 3 computers that are used in the factory. That would be the factory overhead. The depreciation of the computers that are used in the factory. We know computers are normally used for office and administrative work, but in this case, there are some computers they are using in the factory. So we have to get their depreciation. Their depreciation is the factory overhead. So depreciation of computers. Depreciation of the computers. What is the cost of the computers? And which method are we using? We are using a straight line method. Depreciation is 20% of cost. Okay. So how much is the cost of the computers? It is 35 millions. So I'll come and bring the 35 millions. Yeah, that's the cost of all the computers. But not all the computers are used in the factory. There are 10 in total. That cost is for the 10 computers. But only the 3 are used in the factory. So I want to depreciate the computers that we are using in the factory. So that will be 35,000 times 20%. That gives us the depreciation of all the computers. But I need depreciation for the 3 computers out of the 10 because the 35 is for the 10. So the depreciation should be for those computers that are used in factory. So they are trying to show you that we have computers, but there are those that are used in the factory. So their depreciation should appear under the factory overheads. So 35,000 times 20% times 3 divided by 10, that's 21. That's 2,100,000. Then do we have plant and machinery? Because plant and machinery, those are assets that are used in factory. We have plant and machinery at cost. Yes, the plant and machinery, its depreciation should be reported under the factory overheads in the manufacturing statement. So depreciation of plants and machinery. Depreciation of plant and machinery. How much is the cost of plant and machinery? That is 214,500. 214,500. What is the depreciation rate? The depreciation rate per annum machine is 12% on cost. 12% cost. So all that depreciation should be done in the manufacturing account under the factory overheads. So that is 12%. The cost of the plant, which is 414,500, giving you 25,740. Giving us 25,740. So those are the factory overheads. I think we have captured all. So we get our total factory overheads very fast. We add them up to get the total production cost. Then we add the opening work in progress, we deduct the closing work in progress, then we come up with the cost of the good completed. If you have a question so far, in case something is not clear, please feel free. You ask as you're also trying to add up the factory overhead. Be adding up the factory overhead, but in case you have a question, please feel free to ask Christine, Flavia, Joy, Harriet, Gertrude. If you have a question, please feel free and ask so far on what we have done. Ask in case you have a question. Then also try to add the factory overhead. Try to add the factory overhead. Then we get our total production cost. Please add up the cost very fast. And should be having a calculator, please. Should be having a calculator. Should be having a calculator. Should be having a calculator, please. How much is the total factory overhead, members? How much is the total factory overhead? We want to finish this question. How much is the total factory overhead?
I've got 262,860.
262, 8 what?
860.
860. Those on YouTube, please confirm whether that is the total. You can also help us to get the total. We don't know whether that's the total, but please try to check and see. So this is added to the prime cost up there. This is added to the prime cost. And if we add it, now we get what we call the total production cost. Total production cost. Flavia, thank you so much. The figure is okay, 262,860. Thank you. Total production cost. Date. Correct. Okay, thank you. So total production cost, when we add these two, how much do we get? So let's get our total production cost. Total production cost. What will be our total? What will be our total? This is
89,710.
89,710. That is total production costs. So you see, that's our manufacturing statement, the raw materials, the direct expenses, the factory overheads. But we have to add the opening work in progress. We have it. So we have to bring the work in progress at the start, we add it. So add opening WIP. That opening work in progress, you find that in the trial balance. So check your trial balance. We see what the opening work in progress is. It is 43.8. bring that to add it, because we have to work out this. It was undergoing it was undergoing a manufacturing process. It was partly complete at the start, so we have to add this. It has been worked on, so we bring the cost of 33.8. That's the 43.8. Then we have to list the closing. The closing work in progress, you always find that in the additional info. You always find that in the additional information. Closing. This work is not yet, there is still more work to be done. So the closing work in progress, this is the cost of those goods that are still, those finished goods, but they are not yet fully complete. Their cost is 48. This is from the additional information. Please, closing inventory, always you find this in the additional information. So now we are going to get a cost of goods for a manufacturer. Okay. Cost of goods for the manufacturer, the cost of those goods that are complete and now they are available for sale. How much do we have there? Flavia, how much do we have? Gertrude, Christine, how much do we have as the cost of the goods for the manufacturer? How much? How much? How much? How much? What is the cost of goods for the manufacturer? Those on YouTube, please. Cost of goods for the manufacturer. Cost of goods for the manufacturer. How much? Francis, are you on? Is Francis on here? Members, how much is the cost of goods for the manufacturer? It's how much? 897,710 plus 43,800 minus 48,650. That's how much. That's how much. That's how much. You don't have calculators, please.
It is
Should be
892, 860.
892, 860. Thank you. That is the cost of goods for the manufactured members. That is our manufacturing statement. That is our manufacturing statement. So now what we are going to do, we are going to prepare a statement of profit or loss, and we see if there is a profit. We are going to come up with a statement of profit or loss. This is the manufacturing statement. Those on YouTube, please share your questions here in the chat box. If you have a question, please feel free. You can share question. In case something is not clear, or in case you have, please share your questions. But this is our manufacturing statement. We prepare this, as I've told you, to determine the cost of the goods that have been fully manufactured. So that's it. Then part B, statement of profit or loss. Let us prepare the statement of profit or loss. Sometimes you call this the income statement. So let us prepare one very fast. This session was supposed to end at exactly 8, but as you know, accounting and time is ever limited. At least we have tried to squeeze a little time we have. So let us prepare the statement. Let us prepare the statement of profit or loss, and then we call it call it Saturday. Call it Saturday. Call it a Saturday. Okay. You write the heading. This was textile, so this is Roman 2. What's up with my... Okay, let me first save and then I open it, okay? Because it's like... My gadget is misbehaving, but how? Oh, don't worry. Okay. Okay, let me first go off, but you can stay on. Let me first go off briefly because it's like I need first check on something here. Yes, members, I'm back, but unfortunately, I cannot now do anything. I think now the machine is freezing. I think we have overused it. So what we are going to stop here, by the way, because it's even coming. We have 2 minutes to 8. We are going to stop here. Next time when we meet, I'll do the balance sheet. So make sure that you have the statement of profit or loss. Next Saturday, I will do the balance sheet. And then after doing the balance sheet, sorry, I'll do the statement of profit or loss. Then I'll also get another question where we are supposed to come up with the balance sheet, because on this question, we don't have the balance sheet requirement. So next week when we meet, I'll do the statement of profit or loss. Then I'll get another question, which also requires you to come up with the manufacturing statement, the statement of profit or loss, and then balance sheet. Okay, we are going to stop here for today. Thank you so much for attending. Those who have contributed towards data, please, thank you so much. Thank you so much for your data contributions. Yeah, we are going to stop here, but next Saturday we are going to be on same time. We complete our question, then you also do an extra question. Then after that, we can look at some other topics after covering manufacturing. Yeah, let us stop here for today. Unless you have some questions, if there are no questions, then can stop here for today. Stop here for today. I cannot continue with the class.